Hi everyone, good morning. चलो आज का रिवीजन शुरू करें. The agenda for today, chapter 2 residential status, and a very small topic which hardly is going to take any time, the concept of agriculture income. Chapter 2 is something that is important. Chapter 2 comes up in your papers also. You can expect a question having a weightage of 7 marks, and there has been an amendment. In fact, there have been 2 significant amendments in determining residential status of the individual, so it becomes important in the context of examination. Individual ka residential status is the primary thing to study at CA Inter. Yes, rules for determining residential status of all the persons have to be kept in mind, but you can easily predict that in your examinations you will be getting questions more based on individuals. Section number 6 is what determines the residential status. 6.1 से लेके 6.4 and 6 clause number 6 tells you about ordinarily resident, not ordinarily resident. If you can remember these section numbers, great. If not, no problem. At least just remember कि section number 6 talks about residential status. 6.1 याद रख लो, that is also enough. The procedure is very simple. Individual is the main thing, उस पे focus करते हैं. Step 1, you decide the individual either as resident or as non-resident. If the individual is non-resident, his residential status is determined, that's it. This will be done on a yearly basis. Residential status will have to be determined, will have to be checked every year. And if the individual is a non-resident for that particular year, so that's it. No further thing needs to be done. But if the individual is a resident person, then we will have to further classify him as resident and ordinarily resident, या फिर resident but not ordinarily resident. If he is a non-resident, matter over. If he is a resident, only then I have to go ahead and do something extra. So this is step number 2, and step number 2 will come into picture only if the individual is a resident. Chalo, so how do I decide somebody as resident? First of all, I'll revise all the concepts which do not have amendments. At the end we will discuss what the amendment is. Otherwise we will just see the procedure that normally has to be followed. Deciding an individual as a resident or a non-resident depends on something called as basic condition. It is just a simple term that I use to denote the difference. Okay, resident, non-resident, you require basic condition, and ordinarily, not ordinarily, you require something called as additional conditions. So वो additional है, that is an extra thing. We'll see that a bit later. Step 1, let us just focus on the basic condition part. Condition number 1, the stay in India should be minimum 182 days during the previous year. Our previous year is going to be 2021. So for the year 2021, minimum 182 days ka stay should be there in India. It can be continuous, it can be in bits and pieces, does not matter. If you stay in India for minimum 182 days, then you are a resident. If this condition is not satisfied, that means your stay in India is less than 182 days stay during your previous year. Then you check the second condition. This is the first basic condition. Then you go to basic condition number 2. Basic condition number 2 is saying that your stay in India during the previous year, our previous year means 2021, should be minimum 60 days, 60 or more, and your total stay, now this is to be taken on an aggregate basis, total basis, for 4 years preceding the previous year. So that means those 4 years are going to be preceding 2021. That means starting from 16-17 going on up to 1920. 1617 से लेके 1920, for those 4 years in totality you should have stayed in India for a minimum of 365 days, minimum 365. It can be 365, it can be more than that. You can achieve this number of days in 1 year, in 2 years, in bits and pieces over all 4 years, does not matter. Current year 2021 minimum 60 days and past 4 years minimum 365 days, and the word used is and, matlab you'll have to satisfy both 60 and 365 dono. If this condition is satisfied, basic condition number 2, then you are a resident, and if basic condition 2 is also not satisfied, then you become a non-resident. That is why at the start I said that individual is a resident if the individual satisfies any one basic condition. It could be basic condition number 1 or basic condition number 2. But you are a non-resident if neither condition number 1 nor condition number, just give me a second please. Neither condition number 1 nor condition number 2 is satisfied. Neither 1 nor 2, nothing is satisfied. So Act has given you 2 basic conditions. Any one of them satisfied, you are a resident. Neither one of them satisfied, you are a non-resident. This is a general case. Now, in this general case, there are certain exceptions created. 3 exceptions. As I've already told you, I'm going to discuss everything with you without the amendment first of all. 3 exceptions. Exception number 1. You are an Indian citizen who is leaving India for employment purposes, employment outside India, and so in the current year you are leaving India for employment. Second, you are an Indian citizen who is leaving India as a member of crew of an Indian ship. So you can observe the common things that I am highlighting. Exception number 1 and exception number 2 both talk of an Indian citizen who is leaving India either for employment purposes or as a crew member in an Indian ship. Why are they exceptional cases? They are exceptional cases because in these exceptional cases, basic condition number 2, that is 6(1)(c), basic condition number 2 is not applicable only. You do not have to check basic condition number 2 60 days or more in the current year and 365 or more in the preceding 4 years. You don't have to check any of this. All that you have to check is basic condition number 1. Basic condition 1 is the only condition that is applicable. Indian citizen is leaving India either for employment outside India or is leaving India as a crew member of an Indian ship. So basic condition number 2 does not apply. What applies is basic condition number 1. 182 days or more staying in India, then you are a resident, otherwise you are a non-resident. Generally what we would do is that if basic condition number 1 is not satisfied, we would check the second basic condition of 60 days and 365 days. But in these exceptional cases, I don't need to do anything. In these exceptional cases, all that I need to do is just check 182 days wala condition. Satisfied, resident; not satisfied, non-resident. The third exception, if you carefully observe, is talking about an Indian citizen but who is already outside India, and this Indian citizen is coming into India on a visit. Small things to remember. Indian citizen is coming into India for a visit, which means he is coming into India temporarily. The question will specifically tell you that he is coming into India for a visit. If the question wants you to be covered by the exceptional case, they will use the word visit. This is a clear-cut indication that the examiner does not want you to check basic condition number 2 to indicate that this person is coming into India temporarily. This person is already outside India, he is staying outside India, he is visiting India, he is coming into India temporary basis, he is not coming into India to permanently settle. Exception number 3 also covers somebody called as person of Indian origin. Now, who is a person of Indian origin? So, a person of Indian origin means we are talking about an individual. If he himself or either of his parents mean I am talking about mother or father. It's not and, it is or, either one of his parents or any of his grandparents. Any of his grandparents and grandparents from both sides, maternal and paternal, both are covered. Any one grandparent, any one parent, or the individual himself or herself was born in undivided India, then such an individual is called as a person of Indian origin. And you have to understand the definition like this, that somebody who is a person of Indian origin is abroad and is coming into India for a visit during the year, then basic condition 2 does not apply. All that you have to check is basic condition number 1. If it is satisfied, you are a resident. If it is not satisfied, you are a non-resident. So these are 3 exceptional cases where basic condition 1 does not, basic condition 1 only applies, basic condition 2 does not apply. Now the amendment created, important from an examination perspective. So please remember the amendment properly. You can have a case study type MCQ, and in that case study type MCQ you could be given some information about an individual who is specifically getting covered by the amendment. We are talking about an Indian citizen or a person of Indian origin who is outside India and who comes to India on a visit during the previous year. This is the same as exception number 3 that we can see on our screen above. Exception number 3 and the amendment have this thing identical, but the extra part inserted is that this Indian citizen or person of Indian origin has income other than income from foreign sources. So which means when I am talking about this income, this means this is income arising from Indian sources, and if that amount exceeds 15 lakh rupees, then you fall in the amendment. And now when you fall in the amendment, basic condition number 2 has been modified. Basic condition number 2 has undergone a change. Basic condition 1, no change, always applicable, absolutely no change. But basic condition 2 is now applicable with a modification. The modification is that instead of 60 days, it is replaced by 120 days. And the 365 days condition is specifically still applicable. So the whole condition now is your stay in India during the year 2021 should be minimum 120 days, and your total stay in India for those 4 years, which means starting from 16-17 going on up to 19-20, should be minimum 365 days. Basic condition 1 does not have any difference, no change at all. And so if I have to put up something as a summary, I could I could think something like this. That if I am an Indian citizen, or a person of Indian origin who is abroad and who comes to India for a visit, then I have two possibilities. Possibility number one, if the total income except income arising from foreign sources exceeds rupees 15 lakhs, then it is basic condition number 1 and modified basic condition number 2 that needs to be checked. But if my total income other than income arising from foreign sources is less than equal to 15 lakhs, then I don't fall in the amendment. Then I fall in the exceptional case that was always applicable, which means all that I have to do is only check basic condition number 1. Basic condition number 2, the old one and the new one, before modification and after modification, nothing applies. It is only basic condition number 1 to be checked. If my Indian income is exceeding 15 lakhs, then basic condition number 2 with the modification also has to be checked. Any one of the two getting satisfied, then I am a resident basic 1 or modified basic 2. But if my Indian income is less than or equal to 15 lakhs, only check basic condition number 1, satisfied resident, not satisfied non-resident. Amendment number 1. Related to this amendment, there is another amendment created for determining somebody as and ordinarily and not ordinarily resident. Okay, look at this. An individual who is covered by amendment number 1, if the individual's stay in India during the previous year 2021 is minimum 120 days or more, but less than 182 days. That means the individual is becoming resident because of our modified basic condition 2. Then the individual will be treated as resident but not ordinarily resident. Otherwise, the individual is treated as resident and ordinarily resident. So in simple terms, what it means is, here the stay in India is minimum 182 days. That means basic condition number 1 is satisfied. But if modified basic condition number 2 is satisfied, then I am a resident, and then I will be treated as a resident but not ordinarily resident. If I am a resident as per basic condition number 1, then automatically I am a resident and ordinarily resident, covering myself in the amendment. Keep that in mind. I am an Indian citizen or a person of Indian origin who is abroad and who comes to India for a visit, and my Indian income is above 15 lakh rupees. Basic condition 1 satisfied, my status is resident and ordinarily resident. Modified basic condition 2 satisfied, my status is resident but not ordinarily resident. Neither basic condition 1 nor modified basic condition 2 satisfied, third situation, non-resident. This is when I fall in the first amendment. The second amendment that is created is something very new for India's Income Tax Act. a concept called as deemed residency. And this concept of deemed residency is connected to the concept of citizenship. India never has given importance to citizenship, but this amendment has focused on the citizenship aspect. If you are an Indian citizen, remember only the word used is Indian citizen. Amendment number 2 is not applicable to person of Indian origin. If you are an Indian citizen and your total income other than income from foreign sources is exceeding 15 lakh rupees, and important stuff, such individual is not liable to tax in any other country. So you are an Indian citizen, your Indian income is exceeding 15 lakh rupees. Your Indian income is exceeding 15 lakh rupees. But you are not subject to tax in any other country. Maybe because you stay in other countries but you are a non-resident of that country, and that country's tax law does not tax you. That country's income tax law do not tax you on the income. So if you are not paying tax in any other country of the world and you are an Indian citizen and your income exceeds 15 lakhs, three things to satisfy. Number 1, you are an Indian citizen. Number 2, your income from Indian sources exceeds 15 lakh rupees. Number 3, you are not paying tax in any other country. Then you are deemed to be a resident of India. Then in this situation, you are deemed to be a resident of India. And related to amendment number 2, the fourth amendment that is covered is that if you are covered by amendment number 2 and you are a deemed resident, then you are deemed to be resident and not ordinarily resident. Resident but not ordinarily resident. So, 4 amendments, quickly going through them. Amendment number 1, Indian citizen, person of Indian origin, already abroad, comes to India for a visit, and Indian income is greater than 15 lakhs. Then basic condition 2 will apply with a modification that instead of 60 days, you will have to check minimum 120 days and 4 years ka total has to be 365 days. If you satisfy that modified basic condition 2, you are resident but not ordinarily resident. If you are satisfying basic condition number 1, then you are a resident and ordinarily resident. Amendment number 1 and amendment number 3 connected to each other, discussed. Amendment number 2 and amendment number 4 are connected to each other. Amendment 2, if you are an Indian citizen and your Indian income exceeds 15 lakh rupees, but you are not paying tax in any other country of the world, then by default, assumed to be a resident of India and assumed to be resident but not ordinarily resident. Okay, what if you do not fall in the amendments? If you do not fall in the amendments, then you can either get covered in the general cases or you can get covered in these exceptional cases. If you fall in the general cases, basic 1, basic 2, any one of the 2 will be satisfied, you are a resident, which means you will have to check both. If you fall in the exceptional cases, you will only be checking basic number 1. Basic number 2 does not apply only. Now, moving ahead, what if you are in the general case or you are in the exceptional case, but you are not in the amendment? You are not in the amendment. You are in the general case, you are in the exceptional case, and you become a resident. You become a resident. The next step is to decide and ordinarily resident or not ordinarily resident. What do we do for that? We check additional conditions. Somebody who is covered by the general cases and those 3 exceptional cases. Then additional condition number 1, you must be a resident in India for minimum 2 years out of the preceding 10 years. So for us, those 10 years are going to be 1011 to 1920. In 1011 to 1920, for every financial year, we will have to check whether this person is a resident or a non-resident. And if he is a resident, then we have to count for how many years out of the last 10 years is he a resident. And if that is 2 years or more than 2 years, additional condition number 1 is satisfied. I'll repeat this. Our previous year is 2021. So we are taking into account the past 10 years. For each financial year, we will check whether the individual is a resident or a non-resident. And then we will count the number of years for which he is a resident. If that is 2 or more than 2, then it means additional condition number 1 is satisfied. Now, if additional condition number 1 is satisfied, we will check additional condition number 2, which says for 7 years preceding the previous year. That means this will be 1314 to 1920. For those 7 years, the total stay should be minimum 730 days. Could be continuous 730 days, could be in bits and pieces, does not matter. But the total for those 7 years should be minimum 730 days. If additional condition number 2 is also satisfied, then the individual is resident and ordinarily resident. If additional 1 is not satisfied, additional number 1 not satisfied, or additional number 1 got satisfied but additional number 2 is not satisfied, then in this case the individual will be treated as a resident but not ordinarily resident. So additional conditions, if you simply observe, are talking about your past years, past 10 years, past 7 years. You satisfy both the additional conditions, you are a resident and ordinarily resident. You satisfy any one additional condition, you satisfy 0 additional conditions, you are a resident but not ordinarily resident. That also means, now I think you can understand that if amendment number 1 and amendment number 3 apply, then there is no need to check these additional conditions. Remember, additional conditions are to be checked only for those general cases and only for those 3 exceptional cases. If you are falling in the amendment, then the amendment itself has told you how will you decide an individual as resident and ordinarily resident, resident but not ordinarily resident. You don't need to check additional conditions. Additional conditions will have to be checked only if you fall in the general cases or if you fall in the 3 exceptional cases where there are no amendments. Okay, so this is your residential status of individual. This is something important. Go through them properly, and if you have any doubts in the comment section, you can post your doubt. I will get a notification the moment you post your doubt. I'll reply to you on that notification, on that comment itself. But it is this amendment which needs to be studied properly for exam purposes. Going ahead, section 6.2, residential status of HUF, residential status of firm, residential status of AOP BOI. Here the concept is very simple. You cannot have a concept of stay. Hindu undivided family cannot stay somewhere. Some family members may be abroad, some family members may be in India but staying at a different place. Firm is partners, a group of persons called as partners. Firm cannot stay somewhere, AOP cannot stay somewhere. So for that, the concept used is control and management. If control and management is fully in India, resident, partly in India, resident, fully 100% outside India, non-resident. If you are a HUF and the HUF is a resident, then for the HUF you have to decide this extra status, and ordinarily or not ordinarily. That extra status will depend on the Karta's extra status. If the Karta is and ordinarily resident, then the HUF is also treated and ordinarily resident. If the Karta is not ordinarily resident, the HUF is also not ordinarily resident. By chance, if the Karta is a non-resident, that means there is no extra status for the Karta, but the HUF is a resident. Why? Because the control management was partly in India. Then we will say HUF is resident but not ordinarily resident. So the extra status of the HUF depends on the extra status of the Karta. And this extra concept of and ordinarily or not ordinarily, that is only for individual and HUF. Company, firm, local authority, AOP, the concept is very simple: resident, non-resident, that's it. Determining whether you are and ordinarily resident or not ordinarily resident, that thing has to be done only for individuals and HUF. So HUF, firm, AOP, BOI, the concept is very simple: control and management. Company. If you are an Indian company, then you don't need to check anything. Indian company is always treated as a resident of India, matter ends. If you are a foreign company, this is discussed in depth at CA final level. At CA inter level, all that you need to know is just the concept and the terminology. If you are a foreign company, then if the place of effective management, so highlighting the place, if the place is in India, then the foreign company is a resident. If the place is outside India, then the foreign company is a non-resident. It is only the place of effective management. Where is the place? So you are not bothered about wholly in India, partly in India, nothing doing. If the place where management decisions are taken is in India, now whether all decisions are taken or some decisions are taken does not matter, don't bother about that. If the place is in India, resident. If the place of management decision making is outside India, non-resident. Residential status of every other person, it is the same as section 6.2. Section 6.2 has said that if the control management is in India fully or partly, then resident, and if the control management is fully outside India, non-resident. This concept is applicable for every other person who is not covered by 6.1, 2 and 3, is covered by 6.4. But 6.4 does not give you anything new. 6.4 says whatever is mentioned in 6.2 will equally apply. So your section 6, this is your residential status. Now, what else do you have to study in the chapter? You have to study section 7, you have to study section 8, you have to study section 9, and then eventually you have to study scope of income. Section 7 actually has become ineffective due to the amendment that has been introduced in the chapter of salaries. Employer making a contribution to recognized provident fund, employer making a contribution to pension scheme. You may remember that there is an amendment about 7,50,000. In the salary revision lecture, I will be discussing that thing in depth. There is a small confusion also, and what are you supposed to do in the exams? What is the institute doing? I'll be discussing all of that in our salary का revision lecture. As of now, you can understand that section 7 can be safely ignored because whatever is mentioned in section number 7, you can say one thing. It says it is income deemed to be received. But guys, if it is deemed to be received, it means it is deemed to be received in India. And the moment you say it is deemed to be received in India, it goes without saying. The moment you say it is deemed to be received in India, it's pretty natural to understand that these incomes will be taxable in India. You may do a job in India, you may be posted outside India, it does not matter. If your income is getting covered by section number 7, it is taxable in India. Now, the amounts taxable, the formula, etc. has become ineffective because of the salary amendment. So just keep this one small thing at the back of your mind, that if income is deemed to be received, it means it is subject to tax in India. Section 8, dividend income. Again, a detailed discussion will be done when we do the chapter of income from other sources. Dividend also has undergone an amendment. Dividend distribution tax has been abolished. Now dividend is taxable for the shareholder, for the receiver. There used to be a concept of dividend distribution tax which the payer company used to pay to the government. That is abolished. Now dividend is treated like any other normal income and brought to tax for the receiver. What is section 8 telling you? Section 8 helps you to decide the year in which it will become taxable. If it is interim dividend, it is taxable in the year in which the shareholder receives it. And if it is final dividend, it is taxable in the year in which it is declared by the company. Then you don't have to wait for receiving the dividend income. The financial year in which it is declared, it is income of that year. But interim dividend, shareholder will be considering it as his income only when he receives the money, not when it is declared. Just keep this in your mind. Okay, section 8 helps you to decide the year in which dividend income is taxable. Section 9, deemed to accrue or arise in India. Again, it goes without saying that if this income is deemed to accrue or arise in India, it means this income is taxable in India. You will have to pay tax on this income. It is assumed that it is accruing in India. Detailed notes, you can study everything from the detailed notes if you have some confusion. As far as remembrance is concerned, it's something very easy. If you have any income from business connection in India, then it's taxable for you. If your property asset source of income is situated in India, that property asset is giving you income, house property income, capital gains income, but that house property, that capital asset is located in India, so the income is deemed that it is accruing in India. If you are earning salary, but the services that you are rendering are rendered in India, so but obviously you are working in India, so your salary is assumed to accrue in India. So whatever may be your residential status, this income is assumed to arise or accrue in India, taxable in India. If you are rendering services outside India, but that salary is being paid by government and you are a citizen of India, then even if you are working outside India, this income will still be deemed to accrue in India and therefore taxable. Generally, where does salary accrue? The place where you work. That is where the income is accrued, that is where the income has arisen. So if you work in India, it accrues in India. By that logic, if you work outside India, it accrues outside India, yes. But section 9 says that if you are working outside India and the salary is paid by government to a citizen of India, then even if you are working outside India, does not matter, it is deemed to accrue in India and so you will have to pay tax. Similarly, if dividend is paid by an Indian company outside India, you are paying dividend to a shareholder in France, you are paying dividend to a shareholder in New Zealand, Australia, but you are an Indian company, TCS, Wipro, Infosys, Reliance, then the dividend is declared by the Indian company, the source is in India, then that dividend will still be accruing in India, taxable in India. Point 6, this is something that again we will cover in the chapter of IFOS. When you receive money as a non-resident, but the person who is giving the money to you is resident. Money is received outside India, but the one who gave that money to you, and that money is given free of cost. It is not because of a contract, it is not because of a job, it is given for no consideration as a gift. Then the receiver is a non-resident, he is receiving that money outside India, but still this income is going to be taxable for you in India, because we are going to say that although you have received it outside India, it is deemed to accrue in India, and if it is deemed to accrue in India, it means it is taxable in India. Last three incomes in this section 9: interest, royalty and fees for technical services. Something very common, easy to remember if you observe a pattern. If interest is paid by government, then yes, it is deemed to accrue or arise in India. So for the one who has given the loan, the lender, when he will get interest income, it will be taxable. This concept is equally applicable to royalty also. Royalty payable by government, deemed to accrue in India. Fees for technical services paid by government, deemed to accrue in India. Government is paying, it means it is assumed to accrue in India, taxable in India. Moving ahead, now comes something not complicated, it may sound complicated, so you got to pay attention properly. If the one paying interest to you is a resident person, but the loan is used in India, why? Either for business or to earn any other head of income, then for the lender, income is deemed to accrue in India. So the borrower has used the loan money in India either to earn PGBP income or to earn any other income. Then whatever interest he pays to the lender, for the lender, it will be deemed to accrue in India, taxable in India. If the borrower has used the loan for business activities outside India, for earning any other income outside India, then for the lender, section 9 will not apply. A resident person is borrowing money but using it outside India, then the income is accruing outside India only. Interest income is accruing outside India, not accruing in India, not taxable in India. Lender, you will not be required to pay any tax. Section 9 will not apply. If you are paying tax as a lender because of your residential status, that's a different story. But as per section 9, you don't have to pay tax because your money was used outside India and it generated interest income for you. Section 9 will not tax you. Maybe some other section of Income Tax Act can tax you based on your residential status. That is a different matter. So the pattern to observe: who was the borrower? Borrower was a resident person. Lender ka loan money is used in India for PGBP or other activities. For the lender, income is taxable in India, deemed to accrue in India. If the loan money is used for PGBP or other income outside India, then section 9 does not apply, not deemed to accrue in India. Now comes the last situation where we are saying that interest is paid by a non-resident person. So the borrower is a non-resident now. Earlier, my borrower was a resident person or the government. Now I am saying my borrower is a non-resident. If this borrower is using the loan in India for PGBP purposes, only in this one situation, lender ka income is deemed to accrue in India. For all other cases, lender ka income is not deemed to accrue in India. Section 9 is not applicable. That means PGBP outside India, any other income outside India, any other income in India. In all these situations, section 9 will not apply for the lender. So if a non-resident is borrowing money and using the money to do business activities in India, then this non-resident, when he will pay interest to the lender, for the lender, income is deemed to accrue in India. I'll repeat this. A non-resident is borrowing money and using the money to do a PGBP in activity in India, then when this non-resident borrower will pay interest to the lender, for that lender section 9 will apply, deemed to accrue in India. In every other situation, interest income is not taxable in India as per section 9. Royalty. If you have really understood interest, then royalty discussion is pretty simple. Royalty is earned on patent, trademark, copyright. If that patent, trademark, copyright is used for business profession in India, any other income in India, section 9 will apply. If that patent, trademark, copyright is used for business profession outside India, any other income outside India, section 9 is not going to apply. Now when you observe something, who is the payer? So bhai, the payer is a resident person. And when you carefully observe, if the payer is a non-resident person, the provision is still the same. Used for business profession outside India, any other income outside India, section 9 will not apply. But used for business profession in India, any other income in India, section 9 will apply. So here there is no complication, it is very easy to understand. Whether paid by a non-resident, see if you can observe the screen, I know it's a bit small in font, but if you can observe a pattern, whether paid by a resident or a non-resident. But if the patent, trademark, copyright is used in India, section 9 applicable? In India, section 9 applicable? If the patent, trademark, copyright used outside India, section 9 is not applicable. And the same concept is applicable in case of fees for technical services also. The receiver is providing technical services and in return he is being paid fees. If this technical service is used for business profession in India, any other income in India, section 9 applies. This is the same case for non-residents also. Non-resident pays or resident pays, a non-resident pays or a resident person pays. But if the services are used in India, section 9 is applicable. If the services are used for business profession outside India, any other income outside India, then section 9 will not be applicable. That fee amount is not going to be charged to tax in India. Used in India, taxable in India. Used outside India, not taxable in India. Last thing in the chapter, section 5, scope of total income. If income is accruing or arising in India, if income is deemed to accrue or arise in India, if income is received in India, if income is deemed to be received in India, then it is taxable for all the three residential statuses. Basically, it is taxable for everyone. If the income is accrued and received outside India, point number 5 and 6 being discussed together, accrued and received outside India. But your business profession control in point 5 is in India and in point 6 it is outside India. Now if you make a careful observation, for the first residential status, it does not matter where the control of business profession is, the income is taxable. For the non-resident also, it does not matter where the control of business profession is, this income is not taxable. The thing to observe is that if your business is controlled in India, then for resident and ordinarily resident, it is taxable. And if your business is controlled outside India, then it is not taxable. So where is the income accrued? Outside India. Where is the income received? Outside India. Where is the business profession control? Whether in India or outside India, resident and ordinarily resident, all case taxable. Non-resident, every case non-taxable. For resident but not ordinarily resident. Business profession control in India, taxable. Outside India, not taxable. And if you are earning income which is accrued outside, received outside, but not PGBP. So you have other heads of income. Then the concept is very simple. First status taxable, the other two statuses not taxable. Last concept, if income is accrued outside, received outside, but brought into India, remitted to India. Now if it is remitted in the same year, it is taxable. But by chance, if it is remitted in a different year, then it is not taxable in the year of remittance. So the concept is that if you earn income in year number 1 outside India, but bring it to India in year number 1 itself, then whatever you bring into India is taxable. But if you earn income in year number 1 and bring it to India in year number 2, you will not be charged to tax in year number 2 when you bring it into India. It is income of year 1. Whether it is taxable in year 1 or not taxable in year 1 depends on your residential status of year 1. Now, if you bring that money which is outside India into India in the same year number 1, then the amount brought into India will be taxable. But if you bring it into India in year 2, year 3, year 4, then whatever happens in year 1 is as per residential status of year 1. But year 2, 3 and 4, you will not be paying tax just because you brought the money into India. Remittance of income is taxable if it is remitted to India in the same year in which it is earned. If it is earned in a different year and remitted in a different year, nothing is taxable in the year of remittance. Things will be taxable in the year of earning the income depending on your residential status. Chalo. So this is your chapter number 2, residential status. Now we will continue with chapter number 3. I'll create a separate video for it, and chapter number 3, agriculture income. We'll discuss something small in agriculture income. Okay. Chalo guys. Bye-bye.